Hello and welcome to Ecoholics. Once again, a very good evening to all of you. Today we'll discuss about the agricultural credit. Now you know that agriculture is important for the India's perspective. There are two reasons why agriculture is important. First of all, the first reason is that it provides food security. The second reason is that almost 50% plus population is still taking their livelihood from the agriculture. So these are the two important phenomena that we have. So 50% of the population is still engaged in agriculture sector. Another perspective, if we say, that is from the perspective of the credit. So credit is the third important thing because credit gives temporary support to consumption as well as investment. So temporary support to consumption as well as the investment. Now if you see the agricultural credit in India, that is what the topic, today's topic, very important topic from the perspective of the examination, especially for UPSC examination. And here other examination will get the benefit from this. So let's begin with the main topic here. So here if we see that whenever we will realize that the credit growth goes up. So whenever you see that credit growth goes up, it means this is a positive sign. Now positive sign for what? Because it means it is a positive sign for the growth in that particular sector. Now if we see the credit growth in India, that actually performed better. But if you compare with agricultural performance, that is not able to commensurate. It means if you see the credit grew quite a long way, but there was no growth in the agriculture sector or very less growth. For example, if we say that financial year 2018 and 19, if you see financial year 2018 and 19, the banking sector gave 12.55 trillion rupees as the credit to agriculture sector, whereas the government target was 11 trillion. So the government of India's target was 11 trillion. It means bank gave more than what government had set the target. Now here obviously this is a good sign, but we cannot say that this commensurated with the agriculture performance or this reflected on the agriculture performance of India. Now if you see the data, if we compare 1971 to 72 to 2017-18. Now if you see the agriculture credit growth rate, that was rupees 7.8 billion in 70, 71, 72, and that has risen to rupees 8,235 billion. So from 7 billion to 8,000 billion. So you can see that has increased quite a manifold. But if we compare with the real measures, real measure what is? That is credit growth vis-a-vis GDP, that is of agriculture GDP or agri GDP. If we say it was meager growth. Now if we compare the growth, so if you compare the growth of 71 to 72 and the 1989, just before the reforms, 1989 and 1990, if you see the direct agriculture credit growth as the percentage of GDP, it was 4.2%. If you compare with another period, that is starting with the economic reforms 1991 to 1999-2000, then the growth rate was actually decelerated to 3.2%. Again, if you see from 2000 to 2001, then in comparison to 2007 2008, that growth rate went up to 12%. So it was quite high growth rate. But after the economic crisis of 2008-9 to 2017-18, again the credit growth rate went down to 3.6%. Now we have to understand what was the reason behind the high amount of credit growth vis-a-vis agriculture GDP in this period. Now you must have seen that the main innovation was at that particular time was the Kisan credit card. Now Kisan credit card actually innovated in the year 1998, and this was the important innovation in order to bring the credit toward the agriculture sector. Another reason is the interest subvention scheme. Interest subvention scheme in 2006. What is the meaning of interest subvention scheme? It means suppose you have taken the loan and the loan you have taken at 10% per annum, then government gave the subsidy of 3%. It means you have to pay only 10 minus 3, that is 7%. So that 3% is known as the interest subvention, that is concession on the interest. Now obviously you know that in 2008, when the economy was struggling with the crisis, in 2008, due to the food crisis, shortage, etc., a lot of state government as well as the central government announced the loan waivers. Now whenever you announce the loan waivers, there's a chances that the willful defaults or defaulters will go up, because they know that if they'll not pay the loan, obviously government will waive their loan. So the banks were reluctant in order to lend because of the high amount of non-performing assets. So you can see the growth rate declined to 3.6%. Now if we compare with the report given by the NABARD, what is the name of the report? Name of the report is NAFIS. What is the full form? NABARD All India Financial Inclusion Report. Financial Inclusion Report. Now if you see this report came into the picture in the year 2015-16. But that report suggested that only 30% Indian farmers or agricultural household, they actually availed credit from the institutional sources. Institutional sources. What is the meaning of institutional sources? It means formal sector banking. Like what is non-institutional? Like money lender, individual lender, investment, the individual credit giver in the rural areas. So the credit which is from the institutional sources was only 30%. Institutional sources like bank, RRBs and other NBFCs. It means you can say the 70% of the remaining agriculture household actually did not avail the institutional credit, or they were not in need of these kind of credit. Maybe we can say this 70% market is untapped. So this is a big opportunity for the banks to actually lend to the farmers, especially for the production purpose, maybe for investment purpose and the consumption purpose. So remember these 3 points important for the examination purpose. Banks can give loan to the production purpose, investment purpose as well as the consumption purpose. Now if you see the government of India started off this interest subvention scheme in the year 2006, whereby the crop loans at that particular time attract only 7% interest rate. Later, government reformed this scheme and government said that those farmers that they will pay their loans at a regular interval, at a regular time period, government will give extra 3% of interest subvention. It means effective rate was 4%. Now obviously this is done Why? Because if you see the situation, interest rate in the informal sector like money lenders, zamindar, etc., that was 15 to 30%. Now again, it created a huge gap between the institutional rates and the non-institutional rates. Now again, just understand a very important point here. Now this subsidized interest rate on the agriculture that actually diverted towards non-agricultural sector. That's why what I was saying, that agriculture credit went up but not the agriculture growth rate in comparison to the credit. Now here, because the agriculture credit as the percentage of the value that particular input is required was actually very dismal. Now if you see the short term credit in the agriculture, which is very vital for the allied sectors as well. Now if you see the short term credit, suppose you required credit rupees 100 for the input, but states are actually registering 326 rupees taking loans. The farmers in Kerala, so 326. Farmers in Andhra Pradesh, 254. Over and above this 100 rupees. If you require 100 rupees for an input, then the farmers were taking loan at this high rate. So it means, obviously, if you need 100, you are borrowing 326 or 254. It means the same thing, that this credit is actually diverted towards the non-agriculture sector. So this is a clear indication that it is diverted towards non-farm activity. That's why agriculture credit went up but not the agriculture growth rate. Now if you see the total direct credit to the agriculture sector, so direct credit to agriculture sector, direct credit to agriculture sector was 44% in 1980s, and that went up to 74% 2015. But if you see the long term credit, which is generally for investment purpose, it was 56% in 1980s, and that has actually decreased to 25% 2015. So this was direct credit, obviously for short term. So short term credit went up but long term credit went down. Basically long term credit is dedicated towards investment. It means if you are investing, like investing in the land, investing in the tractor, machinery, etc., you need long term credit. Long term credit went down. What happened with the short term credit? It went up. So it means the major burden of this extra is actually fall on the long term credit. So here that requires the productivity as well as in the agriculture sector the credit growth rate. Now if you see, this is the high time that we should actually discontinue the 2006 interest subvention scheme. And if we discontinue this scheme, obviously what government should do in place of this interest subvention scheme, they can take the bold steps, and this bold steps will give the direct income support to the farmers based on their land, that is per hectare. It means they will fix some amount of money per hectare and they give to the farmer. So this is actually in consonance with the de minimis level of WTO, World Trade Organization, because this type of subsidy has also been given in the developed countries, especially the countries in the European Union. So here this direct income support will also lead to improve in the long term credit if they require. So here that particular diversion that government of India will be able to check. So this is the main motive of this lecture, of this discussion. If you have any doubt you can ask, otherwise we'll wind up the session. So if you like this initiative, then continue to come at 10:30 p.m. from Monday to Saturday. We do this every day at 10:30 p.m. regarding any topic related to current economic discussion and analysis, which is very helpful for your understanding purpose of the economy as well as for the daily life, and the most important, the mainly dedicated towards UPSC examination whenever you're writing the civil services examination for IAS or Indian Economic Services. So you get the points from here in order to write the answers. Apart from this, if you like the video, then please give a big thumbs up to this video, and if you have any doubt, anything you want to say, do comment on the comment box. It feels good and it keeps me motivated in order to do good things for you as more as possible. Apart from this, you can follow us on social media, where we provide the daily question on our Instagram account, which is very popular. We provide daily question on Instagram, and apart from this, other social media handles are also useful. Can connect directly to me on this WhatsApp number, and on our website you will find a lot of courses, and these courses are related to examination like Indian Economic Services, which we are starting the batch from the 1st of December. We provide the guidance full classes for economics optional that we have started from 15th of November. Apart from this, UGC NET economics, so the exam is on 3rd, so we'll start a new batch from 15th of December. Apart from this, RBI grade B DEPR, Department of Economic Policy and Research, that we are starting from 23rd of December. And the PG entrance exam for Jawaharlal Nehru University, Delhi University, Delhi School of Economics, and other entrance examination, that we are starting from the 6th of January. So this is a schedule that we provide, and apart from this, the classes of econometrics and mathematical economics is also available on Ecoholics. So I hope you enjoy this lecture. If you have any query, you can directly contact to me on this WhatsApp number. So thank you for tuning in, and thank you for subscribing Ecoholics, and don't forget to click on the bell icon so you'll get the notification of the live session. So thank you so much once again. Good night.